Warren Buffett on how to avoid mistakes in life and business. Cash is trash. Imagine yourself gazing into the huge gulf of possible errors as you stand at the edge of a dangerous cliff. It is a location where countless hopes have been dashed and fortunes have been lost. In the middle of all this, there's a person who shines out as a beacon of wisdom and unmatched accomplishments. Buckle up as we reveal some of the most remarkable insights of Warren Buffett, one of the greatest investors of our time. Keep following as we delve into why Buffett thinks cash is trash. I promise you won't want to miss this episode. Before discussing the idea of cash is trash, we'll acknowledge some of Warren Buffett's outstanding achievements. Born on August 30th, 1930, Buffett is widely regarded as one of the most successful and influential investors in the world. He made his first stock purchase and first tax return when he was just 11 years old. Throughout his youth, he continued to nurture his interest in saving, eventually enrolling in Columbia Business School. In 1962, Buffett began buying Berkshire Hathaway shares when it was still a struggling textile business. Over time, he changed the firm into a diversified conglomerate with stakes in a variety of markets, including manufacturing, transportation, utilities, and insurance. The company has developed into one of the most valuable and reputable businesses worldwide under the man's direction. The experienced businessman is renowned for his modesty and economical way of life. Despite having enormous riches, he still resides in the humble house he bought in 1958 and appreciates simple pleasures. This down-to-earth demeanor of Warren Buffett is adored by people and investors all around the globe. Being titled with the Oracle of Omaha, Buffett has established an illustrious reputation not only as a smart businessman or investor, but also as a philanthropist, and is currently the CEO of Berkshire Hathaway. With an estimated financial worth of over $100 billion, it is safe to say that he is well versed in the art of preventing mistakes. What then is his secret? Here are a few pieces of advice given by him for this specific notion. Warren Buffett famously said that it's beneficial to learn from one's own mistakes and to take lessons from the errors of others. This strategy highlights his conviction that it is very important to pick up knowledge from others. Buffett has frequently emphasized the value of reading and lifelong learning as a way to stop making the same mistakes. We can get significant lessons from the triumphs and misfortunes of other people by reading widely about diverse sectors, history, and biographies. Warren Buffett is renowned for being an avid reader who spends hours daily consuming knowledge. Secondly, he tells us to recognize one's boundaries and remain within their own field of expertise. Making judgments and minimizing unnecessary risk are both made possible by concentrating on what you fully comprehend. Making an attempt to invest or participate in projects outside of your area of interest can result in costly errors. Specializing in a certain business, sector, or investing strategy can help you gain a competitive edge. With this, you can analyze prospects more skillfully, spot patterns and trends, and base your decisions on an abundance of information and experience. According to Buffett, business people and investors should do thorough research in their field of skills. This entails following current markets, examining financial data, understanding the competitive environment, and assessing the management of investments or business projects. This helps reduce the hazards involved with stepping foot in unfamiliar areas by having awareness of relevant aspects, making judgments a lot more easily. For number 3, we have long-term thinking and patience. Warren Buffett is a major supporter of these virtues. He cautions against making snap decisions based on short-term market changes. The stock market can be unpredictable and volatile. It is frequently influenced by human emotions and outside forces. Instead, he advises investors to concentrate on a company's inherent value and long-term prospects. You may refrain from making quick choices and let your investments expand steadily over time by exercising patience. Now, get ready to discuss the most famous concept of his that says, cash is trash. This philosophy is a thought-provoking approach that questions the wisdom about storing an excessive amount of money. Buffett contends that keeping cash in the bank has an opportunity cost. The rewards or returns that are foregone by choosing one choice over another are referred to as opportunity cost. In the context of retaining money, the costs are potential profits that could have been realized if the capital had been put in beneficial assets instead. Stocks, real estate, or companies are all examples of investment opportunities. People who hoard a lot of income may lose out on them. This is particularly true during times of economic prosperity or when sectors or businesses are expanding quickly. Investing extra capital into useful assets can result in higher long-term returns than keeping it idle. Cash, in Buffett's opinion, is a non-producing asset by nature because it neither produces income nor increases in value on its own. The businessman emphasizes how inflation weakens the purchasing power of money, losing its worth over time as a result of rising prices and decreased buying power. Inflation describes a rise in product and service prices over time. As fewer goods or services can be bought with the same amount of money, the value is diminished. Buffett states that inflation is a crucial issue and can have a lasting effect on a person's financial status. He also highlights that holdings in cash are especially susceptible to the depleting effects of inflation. For instance, 1 year from now, $100 will only have the purchasing power of $97 if the prices continue to rise at a rate of 3% annually. The erosion may become more evident with time. Another recommendation by Warren Buffett for both individuals and companies is to invest extra wealth in profitable assets like stocks, bonds, or businesses. The possibility for steady income, capital growth, or both exists with productive assets. People can boost their capacity to accumulate finances by making investments in resources that provide income or rise in value. Well, my friends, it doesn't end here. Despite everything, cash can be of great importance for emergencies. Buffett understands the need for a backup plan in case of such unforeseen circumstances. As a safety net, cash enables people to handle unexpected expenses, medical problems, or brief interruptions in earnings without having to borrow money or sell investments at unfavorable rates. Available money makes life simpler and eliminates the need to make rash financial decisions when things are tough. Besides this, cash also enables people to take advantage of investing possibilities that may present themselves during market turbulence or economic crises. When markets are volatile, appealing opportunities frequently arise. People who have cash funds can take advantage of these, since they can invest in properties or equities with high growth potential right away. Avoiding forced sales of holdings during decline in markets is another crucial benefit of keeping cash reserves. Asset prices may dramatically drop during such times, forcing those who are not well prepared to sell their investments at a loss. Savings allow people to cope with market changes as well as prevent mistakes that can jeopardize their financial objectives. In conclusion, individuals and corporations can meet their short-term financial responsibilities and grasp various opportunities by keeping a suitable quantity of cash on hand for liquidity purposes. Warren Buffett's outlook on finances is consistent with his method of investing for the long run and level of risk tolerance. Significant holdings may be considered a conservative approach, ideal for people with constrained time horizons or limited tolerance. Investing surplus amounts in productive assets may offer a better chance of wealth building for people with an extended horizon and a higher risk tolerance. This theory of Warren Buffett forces people to re-examine the accepted opinion that cash is a constant source of security and value. People can make better decisions regarding the amount of money they hold and pursue wealth preservation strategies by understanding the opportunity cost, the eroding effect of inflation, and the potential for value development in useful assets. The ideas of Buffett are ageless and act as a compass in a world of constant economic change. Today, individuals can maximize wealth accumulation, make wise financial decisions, and succeed by adopting his thoughts. His teachings offer a strong basis for anyone seeking to succeed in both life and business, whether it be remaining within your circle of competence or creating a margin of safety. The amazing rise of Warren Buffett from a young investor to a legendary billionaire has forever changed the face of finance. His great views, including the cash is trash approach, should be followed by individuals today to achieve immense success in the corporate world. If you're ready to start your financial journey, these strategies are the perfect guide. So, did this incredible story inspire you as well? Let us know in the comments section below. Don't forget to like, share, and subscribe to our channel for more such videos. Thanks for watching. Also, do not forget to check out the links in the video description. Watch our video appearing on the screen. We are sure this will also help you on your path to financial education.